Gold has outperformed the stock market 3-1. Gold has outperformed Buffett. I like to call it 10% golden rule. It's just wise and prudent to have 10% in those real assets like gold and silver.
Please join us for our next live stream, Sunday, October 25th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, October 25th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you are new to our channel or you have not already done so, please do subscribe, hit the bell to be notified on new updates, and give us a thumbs up. If you like what we do, we truly do appreciate your support. Today, we have a returning guest on SBTV, Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors, a boutique investment advisor specializing in emerging markets and natural resources. We're delighted to have him here once again. It's time to saddle up and silver up for Frank Holmes. Frank, welcome back to SBTV. How are you doing?
Outstanding, my friends. Good to see you.
Good to see you also, Frank. You look really good. You've been taking care of yourself out there.
You gotta be prepared for that coronavirus. I'm giving you the Manny Pacquiao.
Frank, it's been a while since we last spoke, and but going back to September of 2018, the price of gold has been charging higher and higher, and it took out its 2011 all-time high of 1920, and it also set a new record in August of this year. However, it does seem to be in a bit of a correction right now, correction territory. Do you see this as a period of buying opportunity, or should investors kind of hold out a little bit longer for lower prices?
No, I think it's a great buying opportunity. When you go back and look at in August, we had gold was up 2 standard deviations over 12 trading months. So I go back a decade and I look at its annual volatility. And whenever gold is up close to 40% in that range, that means mathematically it's due for a correction. When I look at 60 trading days, it was up 2 standard deviations. And when I look over 20 trading days, it was up 3 standard deviations. So mathematically, it was just a huge time for a correction, and we're going through it. Now, gold is down 1 standard deviation over 20 trading days. It's back below the mean for 60 trading days. And over the 12 months, it's still up. But more importantly, when you look from a trading point of view, where you are in the second half of the year, when gold pulls back like this over 20 or 60 days, mathematically odds favor go long. And then we can talk about the monetary reasons for going long, the money printing, but just the math of the markets.
Okay, so go long. Are your indicators, are they showing that gold is oversold? Because we kind of get mixed signals between different opinions from people.
Well, if you're looking at a 10-year time period, it's not oversold. But if you're looking at the past 5 years, the 60-day roll is called, it is oversold now. And if you look over 1 month, 20 trading days, and you compare that for the past 5 years, it's oversold 1 standard deviation. Now it can go down 2, but mathematically, it's very easy for it to surge 8%.
Frank, do you see the outcome of the U.S. presidential elections as short-term noise that will not impede the gold bull market, or will it have significant impact?
You know, they say in America, are you going to hit the button for red or blue? And I'm saying I'm hitting the button for gold. That's my color, because it really doesn't matter which person comes in. I think if Trump wins, then the capital markets will stocks and gold stocks will probably trade much higher along with gold. If Biden wins, I think that whole proposal is a big tax on saving and investing that's proposed. So that will impact the markets. But it doesn't really matter, because the G20 countries' finance ministers, who seem to live longer, and in particular the central bankers of the G20 countries, they have their own country club. They have their own cartel, and they survived through many political leaderships, they themselves. And we used to be synchronized global trade in 2001. And then after 2008, there was synchronized taxation and regulation around the world. And now it's synchronized money printing to fight COVID. And so it's not one country with bad monetary policy. They're all doing it basically equally. This incredible trillions of dollars are being spent. And if you try to compare a trillion versus a billion, time versus a second versus money, it's unfathomable when it comes to time. A trillion seconds is centuries of time. $1 trillion seems to be nothing. So when you see that the value of money printing can keep going as long as all the G20 finance ministers allow this game of helping each other out. But real assets are taking off. Gold is taking off. Silver is taking off. Real estate in America is up 10%. I'm looking at construction for housing here in San Antonio because of all the sawmills shut down. Lumber prices are up 40%, and cedar, if you want to build a cedar deck, it's up 80%. So the construction in a house in the past 5 years in San Antonio, Texas, has gone from $200 to over $400 per square foot to build, just to build something new. So inflation is showing up in real assets like gold, like silver, and you're also seeing the Bitcoin, Ethereum space. They've all elevated from their lows. So I think that smart investors are putting more money into real assets.
Yeah, I was going to ask you about that inflation because we have one half of the equation where we have the money printing, but that other half, the velocity of money, seems to be missing. So I wanted to ask you why. I mean, I know you just mentioned there's some inflation out there, but that velocity of money is still near all-time low. So I'm kind of wondering, why aren't we seeing that velocity of money yet?
It's a great question. But more important to me is what is the definition of inflation? The CPI number, I believe, is basically like fake news. In respect that if you go back to 1980 when gold hit $850 and silver hit $50 an ounce, if you use the algorithm or the recipe they use to say this is what inflation is, if you applied that old model, because it's changed several times, to today, those inputs would say we have 8% inflation. So if you can go borrow at these cheap rates, back it up and buy investments, like this is the cheapest money because this cycle will, when it reverts, will be a game changer. As for money velocity, I think the digital world has changed the capture of that as an important data point and that velocity. We do know that the velocity of the expansion, say, of housing has a big multiplying effect for job creation. But I think what happens when you look at that velocity and you have the creation, which is now quiet, but a year ago, the significance of the Ubers of the world, the payment cycles, the PayPals of the world, all these things are changing the capture of money.
And along with that, the Fed, they're telling us they want to hit an average 2% interest or inflation target. Frank, if they get that 2% or above, do you think they're going to be able to control it? I mean, because they've been trying to hit that target for a decade now, and they've never got it. So I think, there's concern that if they do finally see it, they may not be able to control it.
Well, especially if the real inflation, which I grew up as a child, was saying that the economy's at 8%. I think that's much more relevant. And I think the whole thing which you recently had with the big settlements for fixing of currencies, we had the currency rate LIBOR being fixed, and then it was gold, the spoofing markets, and there's big fines and big settlements have just now come through. So the spoofing of gold, there was a lot to do with that. And if you look at that algorithm of what inflation would be like if you use that 1980 factor, we're talking about gold at 7,000. So gold's a deal. I don't believe inflation is at 1.3%. I've seen my food prices go up. I went to the Nike store here, and there's no deals. There's no big price drop. And the same thing with some parts of technology. The only thing where I see there's big deflation is flat screen TVs. But I can't eat those. I can't put them in my car to drive to work. They don't pay my bills, but they're less expensive, but they're not a critical factor I need to survive and thrive.
Yeah, I hear you. Uh, despite the correction in gold prices in September, the World Gold Council reported that gold ETF holdings increased by 68.1 tons, or about 2% of assets under management. Global gold ETF holdings have also reached new all-time highs at about 3,888 tons. So my question is, how significant is this development in global gold ETF holdings to you, and what does it signal?
There's also something else that's a new phenomenon that's happened. And I've been a beautiful beneficiary of this. So when the market crashed in the beginning of March, I was very worried because all of a sudden I'm losing all this money. The assets have all fallen. And I get a call from the head that follows ETFs at Bloomberg. And he says the three cheapest ETFs in the world are Nigeria, coal, and jets. So jets is my ETF, global airlines listed on the New York Stock Exchange, which also has airports, and it's a quant model for picking these stocks around the world. And it basically gone down with the shutdown of the global economy. And I said, well, I think that previous things have bounced. And from that interview, we saw a catalyst happening with millennials. And all of a sudden, and this is the research now, I look back at it, the volume started to grow exponentially. And there's all these minnows coming in and buying the airlines. And a lot of the speculation came from new investors that were stuck at home. They knew everything about the airline industry. They knew everything of the best hotel deals, but they couldn't fly. So they started buying the jets because after SARS in 2003 in Asia, the airlines 6 months later were up 120%. After 2008 and 9, they were up 80%. So there's a speculative money coming in, and then institutional money started coming in because they were shorting American Airlines. They wanted an offset. So the assets over 70 days, $1 billion came into this. Now, why is this important for your viewers? Is that the growth of Robinhood investors is a new phenomenon. And when you go to their website, they have an icon on their toolbar for gold. None of the other brokers do. So you started seeing money buying into gold, buying in the GLD, and the sheer dollar, something like 80% of the checks they received from the government in the US went into the stock market. And they took that money to speculate to make more money. And where they got their knowledge from was not from the mainstream brokers, but from YouTube and podcasts. So they would watch you. And so you're seeing a new phenomenon of speculation that's taking place. You also saw older guys, particular men, this is an interesting thing about gender, that like gambling. And Vegas is shut down. There's no sports to gamble on. What are they going to do? All of a sudden, they started becoming options. The options market for speculating on stocks exploded. So you saw the shift of all this money printing, finding a home for some form of speculation or investing, and the sheer dollar amounts in the US of buying back stock was now surpassed by these new millennials. It's a new phenomenon. And they say, oh, they're all stupid. Well, I disagree, because we know there used to be a data point of showing you how many Robinhood investors bought our Jets ETF. And there was something like 25,000 of them bought, and then it went up 50%. So I say to you that they made a lot of money. This was not a stupid trade. And Buffett, after Buffett went negative on the airlines, a week later, they all took off. So I think it's a new world, and I welcome these traders that come in, because you need to have, for an ecosystem, you need to have barracudas, trout, you need tunas, you need whales, you need dolphins. You need an ecosystem, not just whales trying to position each other. You need a complete ecosystem. And there's new minnows coming in are helping price discovery, looking for opportunity and value. So it's very exciting for microcap. It's very exciting for the GLDs and silver ETFs, etc.
I'm sure they're curious about silver, because we've seen gold hit all-time highs, and silver is just trying to hang on to about 50% of its all-time highs. when do you think we'll see silver start to really close that gap with gold and make a move on its all-time high?
Well, the secular bull market in gold started a little over 19 months ago, and it and it's doing almost 20 months now, and it's doing exactly what you would expect. The 50-day went above the 200-day. That was the beginning, and it was January of 2019, and everyone was negative, negative. Even for the first year, it was still pervasively negative. Gold fell below the 50-day, but the 50-day average trend never went below the 200. And silver sort of was spotty, tracking and was slowly going higher highs, but no real enthusiasm. And that's normal. When you have these secular markets, if you go back to 2001, which ran to 2007, that cycle, you can see there's many times that silver really didn't take off for almost 2 years later, that all of a sudden silver started to really garner investors' interest. But what's very positive about silver is if those who are trading silver coins are seeing a lot of coins leave the US and they're going abroad. They're going to Europe, they're going to Asia. So there's something happening on buying silver coins. And you want to back up the truck, as I tell people, and buy them for gifts. Give them for your children. Right now, we're going to go to the season of lights, the big holiday coming next month, and you give silver coins because the kids never get rid of them. And so I think that silver, and the other part is the funny part. When I was at the Nike store, they asked for exact change because there's a coin shortage in America. Copper, nickel, there's a shortage. So what does that mean for silver coins? They trade higher.
Yeah, we've been hearing stories about that coin shortage too. A lot of theories why it is, but
And the other thing on silver and gold is that it's just the math of markets. The silver volatility is always 50% more than gold. Gold goes up 50%, and you can expect all of a sudden silver at the very end have a surge up 75%. We had that happen in July, August. The ratio was over, gold to silver went over 110, and then boom, quickly fell to 60, then sort of held it around 80. But we saw this all of a sudden this movement take place. So I wouldn't get bearish, and this is a wonderful secular bull market for gold and silver investors. And the backdrop is not one country versus another. We just know that when you have negative real interest rates, unprecedented money printing, expansion of a balance sheet, gold and silver will trade higher.
Frank, you mentioned all that money printing. Do you think the rest of the world is pretty much going to have enough of all the money printing going on, especially with the U.S. since it's the world's reserve currency, and decide to walk away from the U.S. dollar? And if that should happen, how is it going to look?
Where are they going to go? China, with the whole scandal of fake gold, like billions of dollars of fake gold, collateralized debt. That all of a sudden they're going to put that up as collateral. I don't think so. I know they've tried to do that to get oil trade, etc. I don't think so. I think that there's two differences in this paradigm shift. Is this use of monetary, because fiscal policies of governments have not been smart and intelligent. So, and this whole phenomena for investing on ESG, well, it's a big socialist model, but a lot of this has to do because governments have failed. So now they're putting that liability on corporations, which are much more efficient use of capital. And I think with these shifts is for investors to recognize is where your opportunity is. Just like a new feature on your iPhone or new technology, there's shifts in monetary policy, and there's a false belief, but it's short term, that they can use money printing to solve all problems. And we know that to France, when they basically follow the law, LAW, it's the famous Scotsman, that allowed all this printing and things went crazy. And so as the G20 can stay the cartel together, they can hold this together longer. So smarter people are just going to make sure they're always having 10% in gold and silver and gold stocks, high quality gold stocks. I think this quarter is going to have a record on free cash flow. And I'm seeing gold stocks not so busy just to expand their operations. It's very hard for Newmont or Barrick to replace 5 million ounces of production a year. So they just want to maintain that, and they want to have free cash flow. When all of a sudden Warren Buffett buys, That's a game changer. But he's buying something which has free cash flow. If you go a year ago and look at the gold stock universe of the 88 gold producers we follow, they still had a negative average free cash flow yield, but the S&P didn't. It was positive. After March, the S&P collapsed, except for technology and pharma stocks and certain food stocks, but gold stocks started to rip. And so gold stocks now, in the end of March, the end of June, and now September, this September quarter is going to be a record free cash flow yield. So what does that mean? It attracts investors and quants, just like Buffett got attracted to quality gold stocks, as long as management of these companies don't do stupid acquisitions, which dilute that free cash flow per share. I think that gold stocks are going to enjoy a secular, which they're in, a bull market.
Yeah, I was just going to ask you about that, where if you expect more institutional capital to flow into the, excuse me, if you expect more institutional capital to flow into the gold mining sector next year, or even later this year, as the gold price heads higher, creating even more of a FOMO, more of a fear of missing out sentiment in the market.
Patrick, what we're seeing is institutional money coming from Asia into our Go Gold, Go AU ETF listed on the New York Stock Exchange. Go AU, AU is the element symbol for gold. And that thesis is seeing family offices, billion-dollar family offices in Asia, Australia, etc., buying that because 30% of our model are royalty companies. And we have a quant way of only looking at companies with free cash flow and rising revenue per share metrics. And so, yes, I think you're going to see that. And I'm hearing out of Canada, in Canada, 8% of the stock market is gold related, but only 1% of the pension funds are gold stock investing. They've increased their exposure to GLDs, but they've not increased the gold stocks. But I think with Warren Buffett, I think that's going to become that game changer in sentiment around a boardroom.
But Frank, during the gold bull market that ended in 1980 and ended in 2011, oil prices were significantly higher, and some analysts have attributed the move in gold as a result of inflation fears. But oil prices today, sort of in the doldrums. So, in your opinion, why has oil prices not moved higher in tandem to gold prices this time?
The frackers.
Frackers.
The frackers. I mean, it's just like technology of Amazon delivery systems, logistics and software. And the frackers were the game changers for the energy world. And that's why Putin and Qatar came up with movies, documentaries of how bad it is, etc., because they export natural gas. You can just see how these countries fund movies that are going to be anti this industry, which is part of that revolution. And so I think that is a significant game changer. But I think that there's also political strategies. Europe, they raised $1 trillion green fund. So any money is going into solar energy, alternative sources of energy, wind power, etc. If you go across the desert of Texas, I mean, it's quite barren when you go through the middle of Texas and you see tumbleweeds coming across the highway where they're doing all this oil and gas. But when you're driving, you see miles, 1,000 miles of nothing but massive wind farms. And those wind farms are using that cheap electricity to fund pipelines, the export and movement. In fact, Houston, earlier this year, their consumption of electricity went negative. There was so much a surplus from solar. So using all the sun that we have here, well, solar panels are being put everywhere. So these are game changers in use of alternative energy. So I think that's impacting oil.
Yeah. So is it safe to say that the lower oil prices are another factor of a game changer for the miners?
Yes, absolutely. And technology is getting better with solar. And I know for our Global Resource Fund, we made a pivot over 18 months ago that say 25% is energy related. We took it down to 5%. We took the 20% and say, forget the Exxons, that 20% is going to go into alternative sources of energy. And we're just crushing it. We're just destroying any other index with that fund because it's still heavily weighted with the big oil names. A global resource fund is and even the Goldman Sachs fund is oil dominant. Well, you shift out of that and you can get better fund performance.
Frank, do you expect a major fall in gold mining stocks when the stock market finally tanks?
The gold stocks do trade with the market. The best run from 2001 to 2007, we had a strong stock market. And that's what really helped those gold stocks explode. Gold went from 260, 270 up to $700. That's a beautiful run over that 6-year run. But the stock market was also buoyant. So I found that when you have big down days in the stock market and gold could be up, gold stocks are actually flat. They're not participating in it. So that's important. Taxes, if Biden comes to power and all the rhetoric of raising taxes so greatly, etc., that will definitely have an impact because you're taking money from consumers and you're giving it to the government. And so that affects consumption patterns. But what we also do recognize is that zero and negative real interest rates and central banks buying ETFs. So what's happened today is that Switzerland, the Swiss government, floats this $1 billion bond at a negative yield for 10 years. No one buys it. They buy it themselves, create this $1 billion, and they go buy Apple stock. The dividend's higher. It's got growth. So you're finding unprecedented changes in philosophy that central banks are buying. In Japan, they buy the ETF and they're 15% of their stock market. The Federal Reserve cannot buy an individual name. They can stabilize markets through the futures market. But now to get interest rates down, even though they drop rates, the money really wasn't going into, there's no trickle down to corporates and munis, the municipal bond funds. So what do? The government started buying all these muni bond funds and corporate bonds and got the yields down so corporates can roll over their yield risk at a cheaper price. And same thing with all these municipalities in America, is that the municipalities have $1 trillion muni bond market. So it was very significant. So you're seeing the Federal Reserve manipulate what's normal free market cost of capital to turn around and keep this economy going. And what happens is each wave they do this, it just requires more and more trillions. So I've said this at the beginning that 2008 took $3 trillion of the Federal Reserve's balance sheet expansion to get the economy going. 3 years later, gold went to 1900. It went from basically 800 to 1900. So if you forecast this now in 3 years old, gold's going to 4,000. It's very simple because now they have to expand their balance sheet. It'll be $10 trillion. It's already at 7. So you have to see it's not just us. China, their debt as a percentage of their GDP is at record levels. So everybody's printing this money and this funny money to keep the global economy going. And real assets are going to be just an important part, coming back to, I like to call the 10% golden rule. It's just wise and prudent to have 10% in those real assets like gold and silver.
10%. Should we be looking at maybe 15, 20 by now?
Sure, it's a matter of your risk tolerance, but I think that if you don't have 10%, then you're at risk. The largest hedge fund manager in the world, Ray Dalio's Bridgewater, he's 160 billion. He has more than 10% in gold, and I think that's important. Here's a great trivia statement: since the year 2000, when this sort of global boom in the economies of synchronized global growth took place, we'd always seen gold has outperformed the stock market 3 to 1. And not having 10% is just unwise as an asset allocation. And having more is just a matter of your risk volatility tolerance. Some say you should have 25%. But be that as it may, what's more important for people to listen to is that gold has outperformed Buffett. My favorite gold stock, Franco-Nevada, has outperformed Buffett 2 to 1 in the past decade as a royalty business. If you look at Bullion in the past decade, it's outperformed Buffett. If you look, not having gold is just unwise for the 4th most liquid asset class in the world. And I think social media, videos like yourself are educational, informational. I think that this is how the new world is functioning. And what we saw out of Europe with their socialist policies against the investment world with MiFID II, Well, $1 billion of analysts got lost their jobs in New York City alone and in Europe. So where do young people go? Where do they find information? They're going to YouTube. They're going to podcasts. There are so many new analysts on the airlines industry, which I learned, as I mentioned earlier, and then now with gold. Some of these young kids have subscribers of 300,000 followers on YouTube, 300,000 and 19 years old, 19. So this whole, this social media, gathering information, etc., it's all changing very rapidly.
Yeah, it is. Frank, given that you're a fund manager, what's on your radar as far as the other 90%? If we have 10% in precious metals, what might be on the radar for the other 90%?
Well, as a minimum, that I think you want to look for those companies. The first mover advantage is who's hiring. It's like a Peter Lynch, one up on Wall Street's famous book. You buy what you eat and you like. You like the service, like the product. You go buy it. If you started buying the iPhone, or you bought it before that, the iPod, well, you want to go buy Apple stock. You made a ton of money. It's just simple. So one of the things I noticed during March is I had to go to my home, and the Home Depot parking lot was full. Now all the other parking lots are empty, but not Home Depot and not Lowe's. Well, they're hiring people, and everyone was rebuilding their homes. They're stuck at home. Guess what? Those stocks have been spectacular performers. Amazon announced in March they're going to hire 100,000 people. So all of a sudden they'll perform. Chipotle is a food company, restaurant. They have a great takeout service. California Pizza, it went bankrupt. Chipotle hires 10,000 people. So you have to look who's hiring and what are they hiring for, and who's being able to adapt to a COVID world. That's where you're going to make money in the stock market. And interesting enough, luxury goods have done exceptionally well. We own Costco. Costco's done exceptionally well. Amazon has just been on a tear. And now we're talking, say, with Zoom. Zoom's up 650% over the year. Tesla cars continue to be strong in sales. So you have to go and look at who's hiring. Is it one of those first, and who's having structural problems or laying off? You want to step back on. I do know the government here is very pro the airline industry, because it's basically this economic support system. Is if they lay everyone off and then they have to rehire, they have to retrain everyone to fly. So that's very expensive, very time consuming. So rather than those people go to get unemployment checks and then go through this process of trying to rehire, if they keep them alive, so this they call it a bailout. I don't call it a bailout. It's a form of unemployment insurance. And the reason for that is that something like close to 10% of employee jobs are airlines related. So it's very important to get the airlines business back to people feeling safe and flying. It's a great economic indicator of overall growth.
Yeah, it's a great point. Other metals, though, I mean, precious metals are doing okay. How about other metals, uranium, copper, nickel? Nickel seems to be turning things around as well. How do you see metals doing?
Absolutely. Nickel, yeah, for batteries. You're going to go more solar, you're going to more alternative energy, you're going to need nickel. And you're also going to need the zinc. You're going to find these other metals are very, very important. And copper is probably one of the most important. One of my favorite development mines in the world is Ivanhoe Mines. The chairman lives in Singapore, Robert Friedland, and he's building the highest grade operations, predominantly the largest investor of China in the Congo. So I think stocks like that go through that re-rating. I love a company called Hochschild, listed in the London Stock Exchange. It's a big silver gold producer in Peru, but they have the largest rare earth deposit in Chile, in the Western Hemisphere. So this whole technology boom is going to need a lot of these other elements. And so I think that when you buy here, you can buy gold and silver, and it's like buying Tesla gold producer. So it pays a dividend. It's one of those great companies. So you have to look in the gold space. They're profitable. They have free cash flow. You want to be taking a look at those type of stock picking. What's a big employer that does is interesting enough is some of the jewelry stores. You're seeing Tiffany's numbers were pretty robust. I was pleasantly surprised as luxury goods, and their numbers came out for August and September. So I think you want to be really look at companies that have a great delivery system, how well they're using the FedEx models of the world. I think the FedEx and cargo airplanes, cargo jet airlines, that's a booming business. Do you know in April, in the middle of April, when the world shut down, only 89,000 people were flying a day in America, down from 2.7 million a day. At that very low bottom, the busiest airport in the world was Anchorage, because of all the medical supplies and any technology needed coming from Asia to get to North America and Europe. So the cargo right now, not everyone's flying, they're flying at 30 to 40% capacity. They're packing those planes that are flying with cargo in the underbelly. And that's how they're being able to, Delta come out and say that they expect by the first quarter their cash burn to be gone.
Yeah, I remember when I used to work for an airlines at night, we used to have to take out the seats and we'd fill it up with even more cargo. So I see what you're talking about. Frank Holmes, you got your eye on everything. Can you share with us what U.S. Global Investors does and the opportunities that the company offers?
Well, we're a global investment company based in the U.S. We trade over the counter. Oh no, it's NASDAQ. We trade NASDAQ, and its ticker is GROW. We manage mutual funds and ETFs. And we also have our own strategic investments. We launched the first public company that mines crypto in Sweden and Iceland and Quebec. And so we're sort of a unique model of alternative investments. I have a blog called Frank Talk at usfunds.com, and we have tens of thousands of followers in 180 countries. And we publish our investor alert every Friday and do a quick, comprehensive view of gold markets and Asian markets and Eastern European markets for people to quickly want to see what's driving those markets. So become a subscriber. You go to usfunds.com, and I would love for you to follow our thoughts and our views, and happy investing.
Okay, Frank Holmes, we appreciate the time you've given us, and hope we can do this again. And the economy is open and in full swing.
And how high is gold going, Patrick? Look up. Look up.
I can't see that high. I'm to the moon. To the moon. It's got to go to the moon.
Take care, my friend.
Take care too, Frank. Appreciate your time, and you guys take care. Huh? That was Frank Holmes, CEO of U.S. Global Investors and Chairman of Hive Blockchain Technologies. For more of his writings on precious metals, please visit his website, www.usfunds.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.